The chair recognizes the gentleman from Connecticut for 5 minutes.
Thank you, Mr. Chairman, and thank you for holding this hearing. When we look at the title of this hearing, The View from Main Street, Mr. Chairman, I want to thank you, first of all, on page 3 of your testimony that you're reminding the committee that when we talk about Main Street, that the public buys gasoline and groceries from companies that rely upon futures and swaps to hedge swings in commodity prices. My Main Street, that's what people are thinking about when they think about this issue. And there was a hearing in the Senate in May where the CEO of ExxonMobil, Mr. Tillerson, testified about what the traditional real price of oil should be. At that point, it was about $115 a barrel. He said under oath in front of the Senate committee that it should be $60 to $70 a barrel. And he went on to say that it was speculation that is engineered by the high-frequency trading of quantitative hedge funds that explained this increase, which again Mr. Peterson mentioned in his opening comments about the impact of speculation. That's what my public from Main Street is looking for from Washington, is trying to get some sanity in these prices, which again is causing great damage in the economy. Those unemployment numbers that came out earlier this month for June, every single analyst, public sector, private sector, indicated that it was energy prices that was sapping consumer confidence and that was really suppressing businesses in terms of feeling confident to expand. And that's really what's at stake here in terms of getting these rules out from Main Street's perspective, in my opinion. And this committee produced a bill which basically pushed back your authority into 2012. We tried to amend it, at least to carve out one exception in Article 7 for the position limits rules, which failed in a close vote. But, again, from Main Street right now, that's really what people are waking up in the morning and thinking about, which is, what it's going to cost to fill up their car. Connecticut now has the distinction of being #1 in the country in terms of gasoline prices, so maybe it's a little more acute there. But maybe you could help us in terms of updating us regarding where we are with the position limits rule in terms of your deliberations.
I thank you. I think a critical piece of the act and a critical piece of the hearing record of this committee was related to aggregate position limits. It's part of promoting integrity in the markets, that no one speculator is so large in the market that they have some dominance. And you have diversity in a marketplace. So we proposed a rule in January of this year. We got 12,000 comments. It does suggest the public, this was the most comments, over half of our comments are on one rule. And it's about energy prices and agricultural limits and silver and gold. We've now successfully summarized those comments. It's our hope to put a staff recommendation in front of the 5 commissioners shortly and try to take it up after Labor Day. I don't know whether that'll be September or October. I mean, the 5 commissioners have to weigh in on the staff recommendation. But I think it's critical. We're not an agency that sets prices, but our markets right now are 85 to 90% electronically traded, and probably somewhere between 80 and 95% of different markets are day trading and spread trading, with only, it depends on which market, but the oil market right now is about 5% of the position changes on a day are, traders that are trying to change a position overnight. Most of the rest of it is sort of day trading. It doesn't relate to position limits, but it gives you a sense. The markets have changed over the last 30 years.
Well, again, that effort, in my opinion, is critical for this recovery. And that's really, again, where Main Street is most focused right now. And lastly, I would just say in terms of your budget, which you referred to earlier, again, the unfortunate reductions in terms of resourcing your staff. I've said this before the committee, and I say it again. Every $10 a barrel increase in oil prices costs the Navy hundreds of millions of dollars. And from the taxpayer standpoint, getting a market which is at least somewhat aligned to real supply and demand forces is going to be helpful in terms of reducing what we're expending in D.C.
I couldn't agree with you more. I think this agency is a good investment. We're only about 700 people. Less than I think they'd call it a battalion in the military. And we think that taking on a market this large, we should grow to about 1,000 people. I know that's hard because we have a terrible budget deficit problem, but I think it's a good investment to police the markets.
Well, let me just say, Mr. Fraley, I'm a big boy and I can handle it. And I think, what you expressed is something that, frankly, I think is really what Main Street is talking about, because when you go to Main Street and you see the challenges that people are facing to survive these days in terms of basic commodities like food and fuel, and they just don't have any confidence in markets that, as you described, are opaque and excessively volatile. That's what's driving the anger and cynicism that is out there every single day. In southeastern Connecticut, the oil dealers that I talk to, who, as Ms. Hall knows, in Connecticut, we have cold winters and people lock in their home heating contracts year in, year out. You have to hedge in order to really, design a system, a pricing system for your customers to make that work. This year in southeastern Connecticut, oil fuel dealers have just completely abandoned the market. They will not sell a lock-in contract for next winter. And to me, that's the canary in the coal mine, that if we have markets that are designed for end users to be able to hedge risk so that they can actually do what commodities markets are supposed to do, and people are just heading for the exits, then we have a broken system. And that is just something that people feel in their bones right now, and that's really the disappointment that they feel about what's going on out there. And I guess you represent the New England Fuel Institute. I suspect southeastern Connecticut's not the only place where people have just almost given up in terms of the commodities markets. Did you want to talk? I mean, you're seeing that through your trade association?
Both in our associations and in my individual conversation with marketers all over the nation. The last 3 years, especially since the crash, all of us are operating in the dark. Very many of us in 2009, after oil came off at $147 a barrel and all the way back to 30, were crushed in our hedging programs that year. And one of the reasons that you see marketers all over the country now being shy to come back in and offer those programs, which are intended to, and the best we can do is delay the impact of the ongoing increase in energy prices by about a year at a time to our customers. And that's what these price protection programs that we come up with and hedge for accomplish, is that we delay that increase by about a year at a time to our customers. So many people were hammered so badly, so many dealers and marketers were hammered so badly in 2009. But now we have, again, Brent crude oil pushing $120 a barrel today, close to it. WTI going back to $100 today. And we're all concerned that we're looking at 2008 and 2009 all over again. Many companies can't financially afford to take that hit one more time. They'll be out of business.
Well, when I hear when I go home is that Dodd-Frank, which, as Mr. Gensler testified earlier today, was really, the language says it's just to set appropriate limits on non-commercial interests in terms of positions in the energy markets. What I hear is, why do they have any right to participate in the market? Why it should only be people who take delivery of the product that should be able to participate in that market, which obviously is a much more extreme position than legislation that's out there. But I just think I think the chairman is doing a great job holding these hearings. I think it has really been just great to flush out these issues and to raise the red flag, which has been done here by many witnesses. But I think at some point people also have to put in perspective that the public out there is just feels completely unprotected still since 2008, and we just cannot delay in a dilatory fashion implementation of rules that will set up, that should create I think a functioning market. You need rules. That's what they taught us in law school, to regulate the sale of property and the functioning of markets. It's just not chaos. You have rules, and we need rules, and hopefully that is something that these witnesses will help the commissioner and the chairman get right with your input. And again, I think these hearings have done a terrific job in terms of getting it out in the public, and I yield back, Mr. Chairman.